Hello everyone, welcome to our video on value investing. If you're someone who's interested in investing and looking to beat the market, then this video is for you. In this video, we'll discuss the fundamentals of value investing, how to identify undervalued stocks, and perform a deeper analysis to make informed investment decisions. Value investing is a time-tested investment approach that has proven to be successful in generating wealth over the long term. By understanding the intrinsic value of a company and purchasing its stocks at a discount, value investors aim to achieve a higher return on investment than the market average. Through this video, we aim to provide you with a comprehensive understanding of value investing and equip you with the necessary tools to identify undervalued stocks and make informed investment decisions. So let's dive in and learn how to beat the market with value investing. Explanation of intrinsic value and margin of safety. Value investing is based on the principle of determining the intrinsic value of a company and buying its stocks at a discount. The intrinsic value is the actual worth of a company based on its assets, earnings, and growth prospects. A margin of safety is a critical component of value investing, which provides a buffer against any downside risks. To determine the intrinsic value of a company, investors need to analyze its financial statements, including income statements, balance sheets, and cash flow statements. These documents provide insights into a company's revenue, expenses, assets, liabilities, and cash flows. Investors also need to assess the management of the company they are investing in. Strong and ethical leadership is critical to the success of a company, and investors must analyze the management's track record and corporate governance practices. How to identify undervalued stocks. The P/E ratio is a widely used valuation metric that compares a company's stock price to its earnings per share. A low P/E ratio suggests that a company's stock is undervalued relative to its earnings potential. The P/E ratio compares a company's market capitalization to its book value, which is the value of its assets minus liabilities. A low P/E ratio suggests that a company's stock is undervalued relative to its net assets. Dividend yield is the ratio of a company's annual dividend payment to its stock price. A high dividend yield suggests that a company's stock is undervalued relative to its dividend potential. Other key financial metrics that investors can use to identify undervalued stocks include the price-to-sales ratio, the enterprise value-to-EBITDA ratio, and the price-to-cash flow ratio. These metrics provide insights into a company's financial health and growth prospects. Performing a deeper analysis. Investors need to analyze a company's competitive advantage to determine its ability to generate sustainable profits. This involves analyzing the company's products, services, branding, and intellectual property to determine its competitive position in the market. Investors also need to analyze the industry in which the company operates to determine its growth potential. This involves analyzing market trends, competition, regulatory environment, and other macroeconomic factors that can impact the company's growth prospects. Investors need to evaluate a company's growth prospects to determine whether it can sustain its competitive advantage over the long term. This involves analyzing the company's past growth, research and development initiatives, and future growth potential. Applying value investing principles. Selecting a company to analyze. To illustrate the application of value investing principles, we'll select a company and analyze its financials, competitive advantage, and growth prospects. Performing a financial analysis. We'll analyze the company's financial statements, including income statements, balance sheets, and cash flow statements. This will provide insights into the company's revenue, expenses, assets, liabilities, and cash flows. Assessing the company's competitive advantage and growth prospects. We'll analyze the company's products, services, branding, and intellectual property to determine its competitive position in the market. We'll also analyze the industry in which the company operates and evaluate its growth prospects. Making a decision to invest or not. Based on our analysis, we'll make a decision to invest or not. If the company's stock is undervalued and offers a margin of safety. In conclusion, value investing is a powerful investment approach that can help investors beat the market by identifying undervalued stocks and making informed investment decisions. By analyzing financial statements, assessing a company's competitive advantage and growth prospects, and sticking to a long-term investment strategy, investors can generate sustainable wealth over the long term. So, give value investing a try and see how it can help you achieve your investment goals.